What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 5. It's October the 17th, 2023. We made some trades today, so let's get into it. So today I came into the market and decided to go ahead and trade the S&Ps one more time. I felt good trading it yesterday. I felt like I could really, capitalize on the market movements if I can just be patient and wait for my best setups. So that was pretty much my mindset going into today's session. So let's go ahead and talk about the trades that we made today. Let's start over here at the market open at 9:30 this morning. So when we opened, we were trading in the zone between this lower blue level of support and this higher green line of resistance. Now we came up to the top of the zone, created a higher low. So I drew my support level right there, I drew my circle up right there, extended a support level across, and then I pretty much used that as a reference point on trades 1 and 2. So on trade 1, I went long right here as prices came back to retest the higher low. Now I did get stopped out because the momentum just came in and completely ran past my entry price and all the way back down to my stop. But if you look at this trade, it's interesting because prices really just came back down to the support level that they were testing for a long time, going even back into the pre-market. So it makes sense that in this scenario, prices will come back down to this low, because if you think about it, when you have a higher low, a lot of times if you have a major level right below it, it'll come back, retest that major level, and then when prices move up and they break back above that higher low support, that's when you go long. And that's pretty much the idea I had right here on trade 2. So I re-entered the trade as prices spike back up through the higher low. And sometimes when you get stopped out on a higher low like that, on the next candle, if prices immediately spike back up through your entry price, you got to get back in and just hold your trade to whatever your original profit target would have been on that first trade that you took. And that's one of the things I've learned in the market over time. So just came in and made sure I did that, because on a lot of occasions, the only thing about that is that on a lot of occasions you might be a little bit afraid, because you might say, I just got stopped out on that trade before. But if it's a legit higher low setup, every now and then sometimes prices will spike down through and hit your stop. But if they come back, you get in because of the momentum that's coming into the market. And one thing about catching quick scalps like I'm doing is that you have a better chance of making a profit if you trade in line with the momentum and the direction that the market is moving right then and there. So whenever prices spike back up and everything is still in line, meaning that the trend that you were looking at is still legit, you take that trade again. So we move on to trade number 3. Now on trade 3, once I saw prices come back up to this area where it was pretty blocky, we had resistance up here for a good little minute, and prices struggled to break through this level for about a good 4 candles. So once they came back again and got rejected on this one candle, on the very next candle I shorted as they got back up there, because they originally spiked past that level and made it seem like they were gonna break out. But I said, okay, if they come back to that level and at least hover around there and I don't see any momentum coming into the buying side, I want to go short and just take it back down to the top of the zone. So right here, I would say I definitely traded against the upward momentum, because we had a higher low right here that pushed prices higher up to the next level of resistance above. Now I went against that, but only because it made sense. But I don't know, on a lot of these trades I'm still thinking about it, and I'm trying to practice a lot more and just figure out, is this the right trade to make, even though it goes against the trend, but it makes sense because of why I did it. I shorted because it was at resistance, and more than likely it should be profit taking right here. But the only thing that concerns me is, what about the times where it's not profit taking right here and people look at this as a breakout and everybody piles in on the long side instead of taking profit? They add to their positions. So I don't know, I'm going back and forth trying to figure out which one is the right method to have. So I can't really give a fair grade on that trade. I feel like it's good, but then I feel like at the same time I could argue that maybe it's not so good. So anyway, something to work on and think about right there. So after trade 3, we see prices come back, create a new higher low. So once this higher low gets drawn up, we see prices come back, retest this level of resistance above, but couldn't quite get there, but it was close enough. So after that, they pretty much sold off all the way back down to what used to be support and then they broke past that and actually broke past the support level for that higher low right there. So that is what led me to trades 4 and 5. So I shorted right here as prices broke past the support level of the higher low. And whenever you're using a higher low, this is how you use it when you're looking for a short trade. So you can use the higher low not only for long trades as prices come back into that level and you go long based off that support level, but you can also use it for short trades, because if a higher low gets formed and prices break back down past that level and then come back up to retest that higher low support level but can't break through it, well, that support level now becomes resistance, and then you can short from that level of resistance and look to just take it back down to the next level of support below. So that's pretty much the idea I had right here at trades 4 and 5. So on trades 4, I shorted right here, but this came back to break even. But since the market scenario really hadn't changed too much, I took that same trade again as prices spiked back down to the downside, and I was able to make that scalp target that I was looking for on trade number 5. Now, on trade 6 right here, I came back on the very next candle and I shorted this because I was expecting for a repeat of what I saw on trade number 5. The only thing was, look at how large this candle was, and look at how it pretty much went straight to the upside. There wasn't too much selling going on in this candle, and this is what you call a momentum candle. And when you're scalping and you have a very tight stop, the last thing you want to do is trade against the momentum. You want to make sure that the momentum is on your side, because it greatly increases the chances of you being able to make a profit on that quick scalp that you're looking for. So I think on trade 6, I got a little bit too greedy right here and just wanted to keep the momentum going that I was sustaining from trade number 5. But one of the things I've learned over time is that whenever you have a good positive trade, you want to kind of take a minute or two to sit back and just kind of review what the market is really doing, so you can get a good assessment about whether or not you actually want to get back in. Because a lot of times, especially if you have a profitable trade, it's easy to come back and say, ooh, let me get in again, because you still are kind of running on that adrenaline from the excitement of making profits from that trade from before. But you always got to keep your emotions in check, whether it's good emotions or bad emotions. You never want to get too extended on either the good side or the bad side. You want to stay somewhere level in between so you can keep your emotions calm, so you can make the right decisions. Because revenge trading doesn't always mean that you get back into the market after you had a bad trade trying to make that money back. Revenge trading is also when you have a good trade and then you get back right into the market immediately trying to double up on that. So always remember that whenever you have a good trade or a bad trade, just step back, give yourself a couple of minutes to reevaluate. And when you see the next best opportunity that comes around, that's when you get back in. So that's the biggest lesson I learned right there on trade number 6. So after trade 6 got stopped out, we see prices come back, create a lower high right here. And if you look at what's been going on, we had a top that got formed right here. This was the first lower high, and then this was the second. So after this lower high got formed, prices pushed back down a little bit to retest this level of support, and then bounce back up to retest this previous lower high. So anytime you have a lower high that gets retested again and prices are not able to break back above that level and keep pushing higher, that tells you that the sellers are definitely in control at that point in time. So you should be leaning more towards the short side. So after that lower high got retested, we see prices come all the way back down to retest the lows that have occurred since the session opened. We broke past that level for a little bit, came back up, retested this prior level of support, which now acts as resistance since we broke through it. And that right there is pretty much a telltale sign that market principles, the principles of market price action are in work like they always are. Because more than likely when you're in a downtrend, prices should come back to retest what used to be levels of support that have gotten broken through that now become resistance. And that's exactly what we saw on this one wick to the upside right here. So after that wick, I was like, okay, if we break back down below resistance again, that's when I start thinking about the short trades. Because for the buyers to come in and have this much momentum, but then not have that momentum see any follow through after, that tells me that the buyers pretty much did everything they could, and the sellers stepped right back in and was like, nope, we're gonna continue to push this market down. So once we got back down below this level of support, which is now acting as resistance, I said, okay, now I'm looking for the short trades. So that pretty much led me to trade number 7. So I shorted here during the downtrend as prices came back to retest resistance. And when you're in a downtrend, that's one of the very high probability setups that you can look for. And that's the setup that I decided to go with right here, and then just took it back down for my small scalp target and got out right there for a profit. So after trade 7, we see prices spike up. We had a higher low that got created right here. Prices pushed back up for a while and then eventually came back to retest that level. Now this right here is definitely my higher low setup, perfectly appearing in the market. But when I saw it happening live, I was like, I'm just not sure, because we already came back to retest this previous level of resistance before. So now that we're up here again and we had a long tail candle wick that pushed us back to the downside, I just wasn't quite sure if it was the best time to go long right here. And that's a trader's decision. It's up to you on how aggressive you want to be if you use the higher low strategy. If you want to be super aggressive, you can buy every higher low that you see. Now, more than likely, the first higher low after a downtrend gets formed usually leads to the biggest price moves, as we saw today. But it also comes with the biggest amount of risk, because the sellers are still kind of fresh in the market. So they might be excited that prices are coming back to a level of support, but they want that level of support to turn into resistance. So they want prices to actually push back down and break down below it. And sometimes the downtrend might be strong enough that sellers start selling before that higher low even gets broken, and you can see prices push back down and create a new low. So just remember that that first higher low is very risky. So it just depends on your risk tolerance, whether or not you want to take that trade. But where I was at today after trade 7, I think I was slightly in profit, but just by a little bit. And I had already been down for the day. So I was like, you know what? If I'm not quite sure about that trade, let me just wait for something better to come along. So then I see prices pretty much have a very strong move all the way up to the upside. So they went from a low of around 43.68 all the way up to a high of around 43, almost 43.90. So pretty good move right there. A 22-point move in a span of less than 10 minutes. So once we hit this high right here, we actually established a higher low. So I circled this up and drew a level of support across. And then I just looked to go long as prices came back to retest that higher low. And that's pretty much the mindset I had behind trades 8 and trades 9. So if we read the notes, it says I went long right here as prices came back to retest the higher low. On trade 8, it came back to break even. But since the market scenario really hadn't changed, I took the same trade on trade number 9 and was able to take it back up to my scalp target. So after trade number 9, we see prices spike back down. They came back to retest this prior high that got established from this previous higher low right here. It's just not a level of support drawn across, but if it was, we would see the line come across to pretty much line up with where this pivot point reversal happened. And then after that reversal, we see prices spike all the way back up to a zone that had actually been up here since the pre-market. And it's very interesting how sometimes you can get zones from maybe like 6:30, 7 o'clock in the morning that still come back and hold up to be actually valid and legit 3 hours later at 10:30. So it's just interesting how the market has certain price levels that just always have a tendency to get reacted to by the market. So after we hit that price level, we push back down, create a lower high. But despite that lower high, I still went long right here at trade number 10 because I just felt that the uptrend was too strong for me to start looking for short trades. And I've learned that over the course of time, but I learned that the hard way because usually I would see a lower high and start thinking short. Now, in this scenario, going short would have worked because you could have shorted right here below that lower high and then took prices back down to the previous level of support from the higher low. But you also got to remember that the overall trend is up. And as a scalper, for me, when I have such tight stops and such tight targets, I just can't take too much of a risk. So for me, I'm like, it would be less riskier if I trade in line with the trend. So if the trend is up, I'm only looking for long trades and looking to go long and try and buy something. So when prices came back to retest that prior high, I just went long looking for a quick reaction. I wasn't quite sure if the uptrend would continue from that point, but I was pretty sure that it should be some type of reaction, and I was able to catch that scalp off of trade number 10. After that, I hit my profit target for the day and I decided to call it. I made 293 today, so that's not bad. I think it was 300, but after commissions, 293. So continuing to make progress. We're on our way up to that $30,000 mark. So we got some work to do. I think overall, the biggest things that I need to focus on is just trying not to trade in front of momentum. That's one of the biggest problems I've been having over these past couple of days, because it's just so tempting, because you feel like you should get that reaction that you're looking for, and that the momentum should at least fizzle out. But you never can really tell how long momentum in the market will last for. Like, if you look at this one move to the upside right here, look at how much momentum came into the market. Imagine if you tried to short this type of move at any of these levels. You maybe would have got filled right here. You probably would have been able to catch a quick scalp off of this one. But at all of these other levels, if you were shorting, you would have just got washed up. So you always want to make sure that you trade in line with the momentum, because you never know how far the momentum can take prices. So you always want to make sure you're on the right side. And I think that's something I really got to work on, because those are the trades, in my opinion, that make the biggest difference. When you trade with momentum, it's so much easier to get these quick scalps like this. So that's the biggest thing I want to work on going into my back testing session tonight. And that's pretty much all I got for you guys today. I hope you learned a lot about using momentum to your advantage, using those higher lows, not only for long trades, but also for short trades when a higher low gets violated. I'll be back tomorrow on October 18th, 2023, ready to run it back again with you guys. But until then, have a good one, study hard, and take it easy.